What's up, everybody? Derek West with Finance Squared, and I've been contemplating about the credit card industry and how it's come a long way. Back in the day, they simply offered loans to people, single individuals actually, using a particular card in a 5-block radius. Well, they went from that to offering rewards of all kinds simply for using them, including airline miles, cashback, and yes, cryptocurrency rewards. The industry has been a leader in helping to democratize lending money, but it hasn't been all sunshine and roses. In fact, there is an entire cottage industry devoted to helping people out of financial holes that they have dug for themselves, aided and abetted by the same industry. It's a complex topic, one that we will flesh out in this video. I hope you're excited as I am, and if so, be sure to lovingly, tenderly, gently, and with much ferocity, smash that like button for the YouTube algorithm, and let's dive in. Credit cards, or their equivalent, might be much older than you imagine, at least the concept anyway. According to historian Jonathan Knoyer, ancient Mesopotamians used clay tablets to conduct trade with the Harappan civilization, sort of a public-private credit card transaction, I suppose. Now, I imagine that lugging around clay tablets was quite a bit of an inconvenience for our ancestors in the distant past. But the convenience of using that tablet with the seals from both civilizations was less of a hassle than coming up with tons of currency required for large international transactions. And back in those days, currency was gold, shells, and salt, and things of that nature. So you might imagine the tons and tons of coinage that they might have had to lug around. In addition to that, the Code of Hammurabi may be the first codified example of credit in human history. The Codex established a set of laws that govern, among other things, the rules for loaning and paying back money, in addition to how interest should be charged. The history of credit doesn't have to stretch that far back either. In the New World, it was not uncommon for merchants to give farmers seeds, so long as repayment and interest, of course, would come along with a successful harvest. And of course, if a storm came along and ruined the harvest, well, that made for good episodes of Little House on the Prairie. And also some political unrest in rural areas of the United States in the mid to late 19th century. But I digress. This idea of extending credit between consumers and merchants spread to other sectors of the economy as well. This time, utilizing what was called a credit coin, or even credit papers, as a temporary substitute currency. By the 1880s, loyal customers of hotels and department stores would receive an early form of credit utilizing similar mechanisms in the forms of paper store credit cards. In those instances, those lines of credit were only for one of the locations of that hotel or department store. But like anything else, competitors would get in on the action and accept those same credit papers as well. People continued on their merry way until 1914, when Western Union gave metal plates to select customers that allowed those same customers to pay them for their purchases at a later date. And you thought that your shiny metallic credit card was a novel concept. Oil companies would do something similar for customers as well. They would offer what could be called a courtesy card that could finance gas and automobile repair services at service stations. The Charge-a-Plate was the next metal credit card to be offered to customers as early as 1928. This time it would fit into wallets, was personalized with cardholder information, and had paper on the back for the cardholder's signature. The information on the card was embossed, which allowed for clerks and other employees to quickly make imprints of the details for speedy processing. The ease of credit availability at this time, no doubt, contributed to the amount of misery experienced during the Great Depression, along with the deflationary forces applied to the US dollar. With less dollars circulating, less credit was available in general, which is exactly why, in today's day and age, during times of economic slowdown, central banks of all sorts do everything that they can to increase the credit supply. Whether that's the right thing to do is a topic for a separate video, but by now you can see that the concept of credit is almost as ancient as the concept of money, and that producers and consumers love the concept for its ease of use and for the ability to help get product into the hands of consumers. As soon as humanly possible following the Great Depression, the first banks got into the action of issuing credit to consumers. In 1946, the Charge-It card was introduced in Brooklyn, New York by banker John Biggins. This card worked very similar to modern credit cards, in that a customer would use the card to pay a retailer and the bank would reimburse that retailer, at which point the bank would seek payment from the customer. This, of course, took the hassle of seeking payments off of the merchant's shoulders, which illustrates one of the reasons why credit is so popular. Banks love credit cards because it helps to provide a steady stream of income. Customers love credit cards because of the convenience, security, and frankly, financing that they can provide. And merchants love them because they provide convenience for them, financing for their customer, and they offload the risk of you being a deadbeat and not being able to pay them for the merchandise or goods or services rendered. And they shift that risk on over to the banks or lenders that issued the card. A classic win-win situation, unless you've been subprime lending for years, maybe decades, and all of a sudden, people stop paying. Also a topic for another video. Like and subscribe, and let me know in the comments down below if that's something you'd like to see. But the charge cards had its limitations. It only worked at stores located very close to the card's issuing bank. This card and others like it were not national payment tools yet. Shortly following the Charge It card, the Diners Club card was created. The situation behind its creation in itself is an interesting story. A man named Frank McNamara was dining at a restaurant in New York City. Where else, am I right? When he was realizing that his wallet was sitting at home, he made an arrangement with the owner, but he wanted to make sure that that never happened to him again. This spark of inspiration was the genesis of the Diners Club card that was released by McNamara and his partner Ralph Schneider in 1950. This was a charge card intended for consumers who wanted to pay back their travel and entertainment purchases later. This was the first card to be accepted by multiple merchants outside a single area. The card exploded in popularity, and soon more than 42,000 customers had their very own. Card acceptance quickly spread through major U.S. cities. The success of this card, of course, inspired competitors to get in on the action. American Express started their own credit program in 1958, and it followed the same path as the Diners Club card, and it focused on dining and travel as its target merchants of choice. Like the Diners card, the bill was due at the end of the month. The following year in 1959, American Express issued the first plastic credit card, creating an association between credit and plastic that would last for decades until our modern era, when metal cards are back in vogue. Also in 1958, Bank of America introduced the first general purpose credit card, accurately labeled the Bank AmeriCard. This card had a $300 spending limit. In 1958 dollars, that was nothing to sneeze at, and cardholders could carry balances month to month, for a fee of course. It didn't limit the type of merchants that could accept it either. It would be accepted by any merchant who would take it. At this point in history, banking and most finances actually were local and not national or international. To help get his card into the hands of more customers, Bank of America licensed this card to other banks across the nation. To strengthen their card even more, Bank of America joined a group of banks and formed National Bank AmeriCard Incorporated, which was later named to Visa. You more than likely have a Visa card, either debit or credit, in your wallet or know someone that does. And now you know the history behind it. Not to be outdone, in 1966, several New England banks formed the Interbank Card Association to compete with the California-based Bank AmeriCard with their own card called the Master Charge. In 1973, the ICA formed a computer network that connected merchants with card-issuing banks. They soon changed their name to the brand that we all know and love, MasterCard. The Discover card started off as a credit card for Sears employees at stores in Atlanta and San Diego in 1985 as sort of a beta group. It was officially launched to the general public during Super Bowl 20, along with a national TV campaign that followed. So we know the history of the three major credit cards. What about the technology behind them? The technology of credit cards has evolved over the years to help to deliver a financial convenience to individuals, businesses, and banks. Starting off with clay tablets and evolving first as metal plates, and then as cardboard, and then to plastic, and then finally back to metal. The credit card has come in many forms, but it has always been designed to help to deliver convenience of payment to its users, both personal and professional. Modern technology around credit cards has not really been about the credit card per se, but about the money transfer mechanism, either through touch and go payments, online payment platforms that can act as a credit dispensary, or authentication and authorization tools to help to eliminate credit card fraud. Speaking of credit card fraud, it's not been all positive for credit and the credit card industry this entire time. What am I talking about? Let's take a look. The credit card industry and credit in general has and will continue to suffer from a couple of major issues. The first and most serious is the situation that many people find themselves in as a result of their credit utilization. It's no secret that credit card debt is among the most pernicious in the United States and also represents a serious problem the world over. Being in credit card debt can be a major killer of wealth creation for a couple of reasons. The first reason is the interest that is applied to your debt. Holding a balance on your credit card is considered a convenience by some and a flat-out nuisance by others. And some feel like it should not be allowed or it should be curtailed in some way to minimize the damage that consumers who get caught in debt spirals face. When you hold a balance on your credit card for more than a month, by simply making the minimum payment as an example, you are incurring interest payments on that balance, increasing the cost of ownership of whatever item you purchased, decreasing your ability to invest in your financial future. The large volume of credit card debt that people incur has created an entire industry whose sole purpose is to get people to take out yet more loans, either against the equity that they have in their home or with some other valuable item as collateral, to quote unquote consolidate the credit/loans that they have incurred to buy mostly consumer goods. Now, all of this is caused, frankly, by easy access to credit. Credit card companies are in the business of providing convenient access to capital for a small fee. They're not doing this out of the goodness of their own hearts or as a charity to the general public. Nope, they're running a business, which is all fine and good, and everybody needs to eat. And frankly, the services that they provide are indeed well needed, and if utilized wisely, can positively affect the wealth of their customer and add to, and not subtract from, those customers' net worth. The problem is that credit card companies have relied on consumer desire for easy money and credit and relative lack of financial education to be able to navigate the potential minefield that is credit and credit utilization. That isn't the last few years where financial education that has an element of entertainment has enabled people to take the most advantage of the services that credit cards can provide. The same kind of financial education and entertainment that we provide on this channel. Finance Squared. Be sure to subscribe to this channel with post notifications turned on, because you're not going to miss the video I'm working on about how channels just like this one and others have been helping to reform the credit card industry by giving people the financial education that they never had, allowing them to use credit cards for their financial well-being. Also, be sure to comment on this video. What are some surprising anecdotes about the history of credit cards that you may not have known before? We're all dying to know, so share with your friends and fellow credit card and personal finance enthusiasts. We're getting set to take the internet by storm, and you definitely want to be in early on the trend. And remember, folks, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take it easy, everybody, and I'll see you in the next video. Peace.